So as people will continue to trickle in, hopefully, if not, you guys get this special, turn the camera on, you guys get this special one-on-one direct treatment. So that means you probably get your questions answered sooner, and we'll probably have more time at the end to answer more questions. So with that being said, this is Coast to Coast Finance, and this is our first Talk to Me episode. So thank you all for joining, and I hope you get a lot of information. If you don't get it here, you're only going to get it here. So with that being said, I would like to introduce our staff, our team, our crew. My name is Devin Williams. I am the CMO, the Chief Marketing Officer. I am tasked with pretty much social media, outreach, marketing, advertising, pretty much anything visual. And that's kind of how we're going here. Anthony, introduce.
Hey everyone, my name is Anthony Peltier. Like Devin said, I'm the co-founder of Coast to Coast Finance. Super glad to have you guys here. More than happy to share all of our knowledge regarding finance with you, and hopefully you get a lot out of this first session. So thanks for joining, and nice to meet you.
Cool. And also on our panel, we have Alden, who is our crypto expert. Whatever he doesn't know, he'll find out. And that's how we're kind of grinding on this crypto market here. So I'll let Alden introduce himself. Go ahead.
All right, can y'all hear me?
Yes, sir.
All right, my name is Alden. I've been working with cryptos. First got involved in like 2013, didn't start buying really till about 2016, 2017. So yeah, anything about cryptocurrencies or wallets or keys or how to move your cryptos around, I can definitely help you out with that. So any questions that you have, I can definitely help you out.
Great. Thank you, Alden, for that. So again, just a few housekeeping rules or housekeeping protocol. If you have any questions, the chat, and Anthony will get to them, and I'll try to answer them along the way if it's something quick. If not, I'll hold it at the end. A lot of this information may go over a lot of people's heads. That's okay. If it does, make a note of that question and post to our website. Anthony will leave some links in there to make it pretty smooth for you to do that. And we're pretty quick. I'm on linear internet pretty much all day, so if I don't answer it, Anthony will answer it. All the land team will get to it. So with that being said, let's start the show. We have a lot of topics here, so I want to kind of go to it fast, but not too fast. So I want to start it off with stocks. And there's going to be two screens, another housekeeping. So there's me here, and they're showing kind of like the topic of discussion here. Green screen cannot be a weatherman. So this is the topic of discussion here. And if you draw your attention to the demo screen, that will be playing the demo of going through stock options and how to buy stock through Robinhood. We'll be using Robinhood for today. So to start it off, our stocks. So stocks, depending on what you're looking for in a stock and how long you're trying to hold this stock, a stock is basically insurance or asset into for a short period of time or a long period of time. And traditionally, I use this stock. This slide here, the best way to kind of interpret it is bulls and bears. And bulls, think of bulls green and bears are red. So bulls are green is a good market, bullish trends, it's going up, positive motion, that's good. Bears are red, bears are going down, that's a bearish market. Negative, that's not good. However, in technical analysis, you'll know that it's not always good, it's not always bad, but with that, generally speaking, bears and bulls, buy and sell, green and red, is generally what a stock kind of how it operates. And so going into what for you, it kind of goes into ETFs, which is a stock that offers dividends. And so what a stock does that pays dividends is basically something that pays you. And how I kind of look at that is that instead of buying something that has any value in it, it's actually accumulating value over time. Even if you're losing money stock, meaning the stock is going down, you're still getting money off of the dividends based on how frequently they pay out their dividends, 3 months, 4 months, whatever, on the schedule basis. Dividend stock, terminology in terms of duration. If you're looking to day trade, people who are questioning what is day trading is when you buy a stock and you sell it on the same day, like within that 24 or within that period of stock exchanges. And so if you're a day trading, there's a bunch of like restrictions depending on what platform you're using. But with that, day trading is a buy and sell in that same period of time, within that 24-hour period. Swing trade is pretty much the same thing, buying it on one day and selling it the next day. It's swing, same sort of operation, still works there. It's just the terminology, buying it one day and selling it on another. The last one is sort of a long-term trade, and this is when you're holding the asset, that term, that stock, for longer than a year, and that will be called your current asset, or your current sort of stock. If you sell it before that year, then it's a short term. If you hold it past that year, then it's considered long term. And with that, there's tax implications, which my boy Anthony is the expert. You can ask him anything tax related. But that's the difference between day trading, swing trading, long-term hold, short, that sort of like. I'll kind of go into what's the benefit of each real briefly. But generally, a stock is always good if you believe in it. If you purchase a stock and that's something that you did research on, like for instance, Apple, that's something that pays dividends. So whether or not it's a winning stock, if it had a bad quarter, again, you're still gaining dividends from that stock. As long as you don't sell, you don't lose. So with that, I'm going to go into a demo on how to buy a stock. Boom. 1 second here. Okay, so if you haven't already downloaded Robinhood, please do so. It's pretty beneficial and it's simple to use for the beginner investor. The kind of buttons and features are very intuitive, and they have some explanations on things that are confusing, like options and short and puts and kind of definitions, but we won't get into that. Right now, I'm going to go into how to buy a stock. And what we're going to buy today is Apple. Now, mind you, the market is closed and I'm on the West Coast. Anthony is on mid coast, he's Chicago, and Alden, are you again? You mid coast or you East Coast? Alden.
I'm
in any
Central.
case, time does. What was it?
Central.
Central, yes. Okay, so time does matter. If you're on the West Coast, market opens at 6:30 and closes at 1. And I'm terrible with time differences and changes, but it's like 3 or 4 hours difference. Do the math, and that's when the market is open and closes. There is pre-market and aftermarket selling, which is highly volatile and a lot more risky than doing it during the market, but we won't get into that. We'll leave that for another episode. Right now, we shall do a buy of a stock. So again, it's not open market right now, so I'm just going to go into how it would look. And currently, I do not own any Apple. So where we go now is how we find it. Let's go back on, like assuming everything's here. So down here at the bottom, you're going to go to the search bar. You're going to type in the ticker. Type in the name, the full name, or the ticker. Mind you, the ticker is at the top here, and the name, of course, Apple's at the bottom, followed by the price at the bottom after that, and today's percentage gains and the after-hour gains. So if I'm going to go into Apple and purchase it on today, if it was after 6:30, I'll go in here and say I want to put $10 on it. Again, you don't need $1 billion to invest. All you need is $1, and probably less than that, depending on the platform and the transfer rate and fees, depending on that. But nonetheless, if this were something I want to execute, I put in $10. It shows me how many shares I'm going to be purchasing for that purchase price. And at the bottom, it shows me the contract details on what this is and what I'm buying and all that. And then I just swipe up. This won't be executed until open market, which means it's on hold the price that it is right now until the market opens. That price can change between now and tomorrow morning at 6:30. That's where pre-market and aftermarket plays a factor in the price. So yeah, that's where it will sit, and I'll press done. And now it's in my queue. So this is telling me that once the market opens tomorrow, Wednesday at 6 a.m., this will be executed at the market price, higher or lower, whatever the market price is at the time. I don't actually want to buy any Apple, so I'm going to cancel this order. And it's canceled, and it's gone. And there's a confirmation. So with that, it's pretty self-explanatory, I think, and pretty easy the way Robinhood makes it. Other, it's like Weevil, it does look a little confusing with the charts and the graphs, but you don't really have to look at all that if you know just the basics and you just want to buy a stock and just hold it and not look at it for a minute. But the more riskier investors in here, if you are trying to do the day trading or the swing trading, this is kind of basic for you. But yes, nonetheless, that's how I bought and sold. So I'll do the selling. I do the selling part as well. Again, if the market is open, say I want to sell my shares. So I'm going to sell the shares I have in 3M. Currently, I have 0.59 shares. I'm going to do the same. Go down to the bottom, hit trade, hit the sell button. And if I want to sell all, I'll sell all. If I want to sell fractions, then I'll do fractions of whatever I want to sell, 20, whatever the number you want to put in. But in the same sense, swipe up, it's not executing to the open market. And that's pretty much the operation of buying a share and selling a share. And where I wanted to mention about shares, since we're on it, I wanted to show you where the dividends are, how to find dividends. So in this area right here, where it says the stats, this shows you the market ratio. And if you guys are paying attention to our articles that we've been posting, you would know what these ratios mean and how to get them. But it's cool. We got links. It's cool. So in this whole stats area, we'll find a lot of information. Now, mind you, I'm also learning as well. So this is something that I kind of refer to as I see trends going up, news coming out. But nonetheless, the dividend yield is right here. This is where you would find which stocks all, and I won't go into that. Yeah, I won't go into that part. Yes, this begins, and yes, and you can play around with the app and kind of find out what are the daily moves, what are the boomers, or the ones that are falling short, and might be able to type in. Maybe not. One more time. Okay. So that's how you buy and sell a stock. I will now move on to buying options and selling options. But I need my title screen. I use this one, but it's okay. I want to use the bull of the bears, but it's right. This is a fine illustration. So what is an option? So an option contract basically gives you the right or the obligation to buy and sell shares, but it's an allotment. So what that means is you aren't buying just one share of an option when you're buying a contract option. You're buying 100. It's a contract. Yeah. So you're buying 100 shares of that lot for that one contract. And I'll go into the demo. It'll make a little more sense visually. So when buying an option, you're 100 shares of that option, which constitutes a contract. And with that, that is where a lot more investors play more money because they get more gains. However, with more gains, there's more risk. But if you're a risky player, then you just throw it in on AMC and say, let's go. However, if you want to be a strategic and just to know the basics on how to option trade, you definitely want to start small. You definitely want to start short and not put not all your eggs in one basket. So going on that, they are cheaper, but again, they're more riskier. So having a cheaper, buying 100 shares of a contract rather than buying one share of Apple, which was like $200 or $300, buying a contract will be cheaper than buying one full share of Apple. You can get fractional, sure, but you're trying to do your money, how long you're trying to keep it in, what your expectations are in the market. So yes, it depends on what strategy you want to use, depending on what the trends are and what the prices are on at a given time, depending on the news. So to answer the question, when would you use an option contract? Whenever you think wherever your research was based, and depending on the price and how much money you have in your pocket or in your brokerage account. So it really depends on kind of what you can afford, really, and how confident you are in that stock and sort of the time frame on that stock. If you think it's something that's short, just some hype news, some GameStop news or whatever, then I personally would probably do an option contract where it's less duration, more risk, but more time on the clock, meaning if I do have money that wins, it's a higher gain, but I don't have shares in it, so I won't get dividends or anything from that. But that's also the pros and cons of an option. Again, if I'm going too fast, please let me just slow me down or just drop a comment, drop a question. So that's in share and that's an option. So what's the difference between a share and an option contract? A share, when you purchase a share, it's virtually yours in the sense that you own a piece of that company, of that share. And if they give dividends, you get a paycheck, essentially. With options, you don't get dividends, share. You literally just have a piece of virtual paper that says, I own the right to these shares. If it hits this price or goes down this price, then I may get the option to purchase 100 shares at that moment or just sell the contract altogether. Confusing, but that's okay. We're gonna get into it. So that's the difference between a share and a contract and the benefits of each. And I'm gonna go ahead and jump into the demo. If you direct your attention to the demo screen, where I get it. There we go. Okay, so which one was I going to buy? Okay, so I'm going to go into buying a option contract and we'll do 3M. First of all, personally, I wouldn't buy an option contract with the M. It already looks too expensive just based on the price. So you got the secret scoop. This is how I do it. I know y'all see me posting on social media, my gains, my losses. This is how I go into getting an option and what I think will pop. So if I think I'm gonna pop within the next 2, 3, 4 months, I personally would buy a contract that extends further than those 2 to 3, 4 months just to give me some cushion and support for me to pull out sooner than later than the end date of that contract, that expiration date. So for instance, if I think 3M is going to hit 230 by the end of this month, I'll go into trade, go to trade options. In 2 to 3 months, June, July, August, September, August, I don't have that. So that's okay. So I would personally put something next year, January 21st. And I said it probably will break 230. I'll go into the 230 call. Okay, I didn't even go into calls and puts. So real quick, when you think an option or a stock, I mean, if you think a stock is going to go up, bullish, green, positive, boom, spike, pump, whatever you want to call it, if you think a stock is going to go up, you would buy a call. That's, I think there's an indicator here, how helpful Robinhood is. It shows you exactly what you think would happen. What if you think it's going to go up, you buy a call. If you think it's going to go down, you buy a put. Puts and calls get really complicated. When I was teaching myself, it was very complicated. And even still, sometimes it can get convoluted. But so far, I stick to calls, buying calls, and selling puts. But again, we'll get into that in another episode. So I think that 3M is going to rise to 230 price in 2 months. So I'll pick a contract that'll expire January 21st of next year. That'll give me more time on the clock for that contract. I would pick call 230, which will be the price. Right here, the listing says 433. If you see where it says this, 230 call 433. 433 is the amount you're paying for 100 shares. So if we click it, it says it at the top, buy 3M, 230 call, 121.22, 100 shares. One call, one call is 100 shares. And at the price, it was listed at 433 or 435. That would give me the total cost of 435, what I'm paying to buy this one contract that is made up of 100 shares. I'll slow that down. This one contract is made up of 100 shares that expires next year on January. So if I were to execute this, it's the same process, the whole swipe up. Again, it won't execute because the market's closed, but I'll just show you what it would look like. So again, the same prompt, same notification. This will execute tomorrow when everything's open. So relax, put your money away, basically. So if you're really confident, I would, if it was me, if I was confident, I would probably let it sit. It probably won't get executed if I think the market's going up, because it won't execute on that price that I set it at 435, if you remember. Because of the aftermarket and the pre-market. In the aftermarket, the price will probably shoot up, and my price contract won't get executed because it's higher than the price that I thought it was going to be when I wanted to buy this contract. I hope that wasn't confusing. So with that, that's what it means when you would buy a call contract that will expire further down the line, expecting it to go up. So again, I do not want to do this, so I will cancel that. And we'll go back to that. Yes. So same difference. If I were to sell a contract after that, say that contract goes through, after it's sold, no, sorry, not sold, after it's executed, it'll appear in your options area at the top. And depending on what date it is, it'll be further down the bottom, that 1 year. And if I were to sell that contract, for instance, say this HD call was the 3M call, and I want to sell this, I would go in, trade, sell, and I would do the same process. however many contracts, however many contracts I have, I'll put it at the top, or however many I want to sell rather, I'll put it at the top, put the price that I want it to be sold at. So say right now it's going for, people are asking for 53, the highest is 81. It gives you a mid of 67. I'm greedy, I'll say 80. I want to sell it at 80. That's when I think the market will keep going on as the day goes on. And I have a high expectations for that one. So I put 80, I put review, I swipe up, I leave it alone. I try not to stress, but I'm like super into this. So I'm on it, my phone like all day anyway, changing it, replacing it, canceling it, replacing it, new price, getting greedy. I got too greedy, let me pull back. Price is going down, I'm too much, I did too much. And then either I lose it or I get it. But that's sort of the emotion of being a stock investor. You will get it under control the more you do it, especially the more money you lose. Let me cancel that before I forget. Yes. Not left me on red. Yes. 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 Be sure to make notes of everything too, because when you have a lot of contracts and shares, you can easily lose track of things and miss a spike, miss a sale, and it could hurt. It could hurt, especially when everyone's talking about it and it's trending. So you definitely want to be on the lookout if you decide to get really into stocks and into trading. Yeah, I also recommend having price and like reminders, like price target reminders, set on your phone so you're alerted when a price hits and you're ready to buy or sell, or put it at a percentage of when a percentage is going down or up. Just indicators to help you out throughout the day so you're not on your phone all day, every day. But you guys do that anyway, no shade. With this one, I wanted to show you how to buy a put, which is the opposite of the call. Same process, just reverse. So I give you a real life example. How much time do I have? I give you a real life. Yeah, I give you a real life example. So 2 minutes left. Okay. Okay, the pressure's on. Okay. Okay, we'll use eyes. This was a stock that I was checking out for like a month or so, a little more than a month. My boy Anthony actually put me on it. It was on a Reddit tweet feed, and it was just like boom, and it was popping. So I was like, shoot, why not? Let me throw like some dollars on it and see what happens. So I gained. Actually, look at my record, like so you know, I'm not making this up. So I bought it. I bought a bunch of eyes on the stock, and it started to increase. I sold, made probably a nice chunk, nice grand. Then I got greedy. I saw the market was going down. The pump was over. Everyone stopped. Everyone's selling. It went from like 15 or 20 down to like where it is now, like 5 or 6. And so I was like, shoot, all right, cool. Let me capitalize on the market before it closes out. So I was like, let me put some money on it. But on the flip, I said, I think eyes is going to keep going down. So I bought a put. I bought a put for 2.5. As you see there, the +2, that indicates I have 2 contracts of a put. Bought that thing, right? Bought that thing. I was up like $20. Never sold it because I thought it was going to keep going down. Reading the Reddits, reading all the feeds and blogs. They're like, yo, it's done. It's done. We're forgetting about it. And I got greedy and I never sold the put. And so what that means is when you get greedy and you don't pay attention, you kind of miss out on opportunities. And so with that, I'm still holding it. It could change, but that's the price you pay gambling in the market sometimes. But those are the pumps of certain stocks. Not all stocks operate like this at all. They don't follow the same technical analysis. This new age of meme stocks is kind of like throwing everybody off and how to invest, and it's kind of scaring everybody. But nonetheless, stocks are and dividends are good. So with a put, it's the same thing. Buying a put, want one, price is at 10. I want to buy it. I'll buy it. Swipe up. Yes. Said 10 minutes. Okay. I think I had. Yeah, I think that was like pretty much it. We're gonna like talk about crypto now. So real quick, I give you like a definition of crypto in like a nutshell. What is cryptocurrency? What is a coin? What does it do? Why is it here? So essentially, it's an alternative form of currency that hedges the US dollar. That's kind of confusing. It's another form of money that isn't real on your hand. It's not tactile. It's in the digital world, but it's still worth value because of what we perceive it as. Specifically, let's talk about Bitcoin. Bitcoin has been around for like years and no one knew what it was, but it was just making money. And we're like, yo, I want some of that. And so now recently apps have been opening up, Coinbase, crypto.com, Uphold, DeFi, Binance, all these crypto apps have now been opening up for retailers to purchase cryptocurrencies. The benefits of crypto is that it's a hedge against the dollar. So if the dollar is going down, people are putting money where they trust, or not trust, but where it's making money. So people are putting money in the coins, which is a hedge against inflation. That's sort of how people are looking at the new age of money and how they're investing. It used to be the treasury bonds and the ETFs and the low dividend stocks and just the safe betting money kind of thing. But now crypto is changing the world for the better, and I'm with it. The risks, the benefits and risks of cryptocurrency, the benefits, it makes money. You can see it. NFTs, Ethereum, I can go on for days, but we don't have that kind of time. We have the not unlimited version because we're still growing, but that's okay. We're going to give you all that information another day. With that being said, the benefits of cryptocurrency is a hedge against inflation. Put your money in it, you'll probably get way more money than you would on a low APR on banks, which is like 0.03002. It's trash. It's like you get 2 cents every year, and that's insulting to me. So I rather put my money in something that'll yield something a little bit more tasteful. With the minimal risk right now, if you have minimal coins in a lot of coins, it's not as risky, meaning your coins won't disappear. That's sort of the risk of going into cryptocurrencies, that some people don't know how or where to transfer their coins, and they're losing fee transaction fees. It gets confusing, but nonetheless, if you're going with safe platforms, Coinbase and the ones that are already known, those are the reputable coins that you're able to buy that have a track record and they're safe. But I am not actually the crypto expert. I just gamble in them things and I hold them things. So I'm pointed to Alden and put him on the mic with anything he want to share, really. Alden, you want to say anything?
Yes. Yeah, cryptos are, they're extremely fun to get invested in. But you got to be careful because the market, it moves extremely quickly. So you could be up at 30 grand today, but by the time you wake up tomorrow, you could be down at 20 grand. And that's like what happened to me. Holding my cryptos on a ledger, but the ledger is for me not to sell. So you got to figure out what type of investment you want to do. So you're either going to be a day trader or somebody that's just trying to get in and get out, make quick money, or you're going to be somebody that's in it for the long run and hold it. And I'm in cryptos for the long run. Yes, I do have a few accounts that I'll sit there and sell them and then buy a few other coins and see what happens with those coins and then eventually sell them and I'll do all that. But I also have my Ledger Nano, and that's a hardware wallet that you want to keep. Anything that you're investing in cryptos over, I would say like 5 grand, you don't want to keep that on an exchange, because on an exchange, you don't hold the private keys. So if that exchange gets hacked into, then all your money could be gone tomorrow. So that's why anything that I invest in with cryptos where I'm holding more than about $5,000 or $7,000 worth, then I'm going to keep that on a Ledger Nano where I own the private keys. So if you get into cryptos, just invest what you can afford to lose. Yes, you can make really big gains on cryptos, but again, you know, with those big gains, you can also lose a whole lot as well. So that's my whole thing with cryptos. It's just be careful, go after the fundamentals too. You know, just a lot of people will go after hype on cryptos. You know, that was the whole Dogecoin thing was hype. So with Dodge, my experience in it, I put $30 into Dodge back in 2017, knowing that the coin was a joke, knowing that the coin probably wasn't going to go anywhere, knowing that I wasn't going to probably make any money and I wouldn't see that $30 later again. But I just bought it because it was just a hype coin. It's just a joke coin. But eventually now in 2021, now they're trying to make it a utility. And that's why you're seeing companies and different businesses trying to accept Dodge as payment. So it's now become a little bit more serious. So I'm glad I held on to my $30 worth of, Dodge, because it gave me back then a little bit over 10,000 Dodge coins at that price. And now it's worth a little bit around, I would say, $5,000 or $6,000 now. So that's pretty good off a $30 investment, I would say, especially off of something that you didn't think was going to make it in the long run. So that's one of the things I do. I do a lot of and I'm a very conservative investor too. So it depends on what type of investor you are. So I'm a very conservative investor. I don't like to put a whole lot of money into something unless I'm completely 100% sure. And even with cryptos, I'm still not 100% sure. So I'm still going to be very conservative with my investments in cryptos, but I go after like fundamentals, transaction speeds. What coins can I buy with a low fee, and how quickly can I move them around with low fees? So you want speed as well. You don't want a coin that's going to take an hour long just for you to move it around so that you can sell it. And then by that hour, the market could dip a whole lot. So, and then also the coins that have a competitive edge as well. So I go after coins with a competitive edge. Like I would say, Ripple would have a big competitive edge. And this is not investment advice. This is just my opinion. But Ripple would have a competitive edge, I would see, over a bunch of other coins just due to the partnerships with banks and how RippleNet is trying to take over Swift. Because before you had Swift, you had Telex. So you had Telex first, and then Swift took over Telex, and now RippleNet is trying to take over Swift. And they specialize in international money transfers because they can do it a lot cheaper and a lot quicker using RippleNet to transfer money around the world. So it's cool to go off a hype, but if you're going to go off a hype with these cryptos, make sure you get in, buy the rumor and sell the news. So get in quickly and just get out when it's all over the news. But if you're going off of fundamentals, transaction speeds, the coins with the competitive edge, and you really believe in those coins, then you can sit there and hold them. That's what I do. I sit there and I still hold them. Right now on my ledger, I think I'm down about $12,000, I think, on it. I'm around 20,000, but that's okay because I'm looking at the long term. I'm looking at where is this ledger going to be at in 10 years from now? Where is it going to be at in 15 years from now? So, and like I say, I still have my other account that I do my, daily trading on if I want to, or if I want to just sell something real quick. Another something else I would like to say is if you're in it for the long run, and depending on what type of investor you are, don't panic sell. You panic sell, you'll lose money. I have an account on Coinbase where I was panic selling and then buying back in, then panic selling and buying back in. And I think I started with $2,000 on the Coinbase. And now I think I have about $680 worth now on the Coinbase from panic selling. So, yeah, just if you're in the cryptos for the long run, don't panic sell, just hold it. and see what happens. But if you're just trying to get in and get out, then yeah, get in and get out. So that's what I would like to say about cryptos. And if y'all have any questions about wallets and private keys, you can definitely email me, and I can definitely answer those questions as soon as possible.
Sweet. Thank you for that, Alden. We'll also drop the links to our website where you can post any question in the world on our blog page or our forum page. If you're not a member, please become a member. Everything we provide is free. Everything, information, advice. We're not legal advisors. We are not telling you what to do and what to buy. However, we are experienced. We've done this. We're not new to this. And we're just trying to help the world one step at a time. So I want to leave the floor open for some questions, or I have another topic. I'll let you guys decide. Of course, Dimitri, yes.
We do have a question, Devin, from Alejandro. He said, what website other than coasttocoastfinance.com do you recommend to look for stocks that can be daily traders?
Hey, kind of bounce.
It does make sense, Alejandro. So yeah, I'll let Devin take that one if he has any sites he wants to call out. I have a couple as well.
I'll keep it brief. I kind of bounce around. I use a lot of Webull, which is another trading app. I kind of look at the daily gainers, and I do like a bit of technical analysis over like a period of time to see if this is the stock for me. I do a lot of Reddit. Those are the pumpers or the spikers that I'm looking for some quick gains. But I get a lot of my information here from these guys. Yeah, what did you have another?
Yeah, thanks for that, Devin. So Alejandro, I like to use Yahoo Finance a lot. If you're a premium member on Yahoo Finance, they will show you bullish or bearish indicators. As far as daily traders, I'm not a high risk day trader, but there are groups you can reach out to. I would just say a lot of times if something sounds too good to be true, it usually is. So just be very careful about who you take advice from on day trades. Sometimes there's a common scheme called pump and dump where people will say a stock is a good investment, they'll be holding that stock without telling you about it, tell everybody to go buy it, let this price go up, and then they'll sell off their share. That's called a pump and dump scheme. It's actually illegal. So there's been questions about whether or not social media is feeding into these types of pump and dump things. So my only suggestion for you is just, be careful about who you take advice from. If they're not letting you know that what their holdings are, then I would be very cautious about it. But reputable sources, Yahoo Finance, obviously us, Coast to Coast Finance, we don't typically tell you to buy or sell any specific thing. We try to give more general advice, give you the tools you need to succeed, and let you make decisions on your own. So that's my long-winded answer of saying I would just use the information available to you, but also do your own research, do what we call due diligence into a company, and maybe just don't always just buy something because Twitter said to buy it, is my suggestion there.
And if you are going to buy it because Twitter said, don't put more than what you can't afford to lose. But if you're risky, try it.
100%. Anything, even a safe investment, there's no such thing as really a safe investment. So if you're putting your stock into a company, putting your money into a company, you're betting that that company is going to be around tomorrow. But nobody really knows what's going to happen tomorrow. We saw it in 2020. The entire market crashed during COVID. For everybody panicked. Like Alden said, they panic sold, and that's something that every investment carries some amount of risk. So you should only invest, like Devin said, what you can live without.
Yes, very true. You
want to take Dimitri's question of maybe some of the pluses or minuses for Robinhood versus some of the bigger trading platforms like Ameritrade and Fidelity?
Yeah. Yeah. So I talked about Robinhood because it's the more simpler app. And I think about 80–90% of retail investors use that app. So the benefit of the Robinhood is there's no brokerage fee. You can keep your money, transfer money, and there's no fees. There is a fee for selling, but that's like taxes. And they take a little percentage of fee for the sell-offs. But Robinhood, for me, is the cheapest form of selling and trading shares. Any of the other ones, like Ameritrade, they're all trusted, but this is more, I don't have the terminology for it, but it's more rigid, I would say, more strict in terms of you need a longer holding period, you need a longer time to transfer your money, it takes longer business days. You have to wait certain holding periods. It's like a lot of stuff they put on your account because it's so trusted and insured with the broking and marketing trading. Fidelity, that's pretty much the same thing as Ameritrade. Yeah, I would say the biggest advantages, disadvantages is the transfer fees, brokerage fees, and the duration it takes for you to actually use the money that you sent from your bank to your brokerage account, which is the app.
I think for me, the biggest advantage on Robinhood is how user-friendly it is. I mean, everybody's on their phone these days. Like, we use our phone for everything, and Robinhood makes it very easy to trade on your phone. While some of these other bigger exchanges that have been around longer or trading platforms, they're trying to catch up to Robinhood. That's who they're going after because they know Robinhood is attracting a user base that they just didn't have access to before. While with TD Ameritrade and Fidelity, you have an advantage of maybe better customer support, knowing that your trades are probably executed at the best price. And if you have something like a 401k or an IRA with Fidelity, you could then have one login to see your retirement accounts and your investment accounts in one place that Robinhood doesn't offer that right now. So there's a little bit of give and take, and you can always move stuff between brokerages as well. It does take a little bit of work, but a lot of these are free to create an account. Maybe create an account, see which one you like better. You don't have to buy any. You shouldn't have to spend any money to create an account. You should be able to look at their user platform, look at what is available to you if you think you like it, talk to their customer support, talk to a finance professional that's employed at one of these brokerages and see what they're offering you, and then decide which one you want to use. You could even use multiple. I know many people trade on multiple platforms: Webull, Robinhood, Fidelity, TD Ameritrade. Schwab is a big one. I'm sure I'm forgetting a couple, but you don't even have to lock yourself into one. If you want to put $100 here, $100 there, $1,000 here, $5,000 there, totally up to you.
Sorry about that.
Any other questions?
I'm sorry. I had a question regarding the Robinhood. If you're able to bring back the that screen share you were doing of your Robinhood account.
Yes.
And thanks so much again, guys, for putting this on. This is actually super helpful in trying to understand what are the kind of the nuances and kind of details when it comes to doing investing in options trading. So thanks guys for doing this.
Absolutely.
Okay, so my question is related to I opened up a Robinhood account probably a few months ago, and I'm just trying to understand. It may sound silly, but I'm just trying to understand how much I'm up or how much I'm down. And like from the graph that I'm seeing, like I can do these different views in terms of like, the 1 day, 1 week, 1 month, and so on. But like for now, you're looking at 1 day, you're up $605. Does that mean you're up $605 from today, or over the whole period? Like, if you could just, I guess, explain what that each of those mean.
So that can be a little tricky at times, and a lot of our platforms are a little confusing in terms of track keeping. But Robinhood, for me, I go to year, and I go drag all the way down to at least where it says 0. Wherever number I can get closest to 0 will give you the closest indicator of how much you put in. But it was easier to find that when I was earlier on, like less than a year. And it was a point where this line was flat and it said 0. It said 0 all the way up until stocks started making money. But closer to where we can find the closest 0, like here, this is how much I invested, like minus $80. So it would be this minus the 10,000 is how much I've gained.
Without maybe sharing any personal information, can you show him how to see your statements on the app?
Yeah.
This should be helpful for you, Dimitri. Robinhood should issue you monthly statements and annual statements that should show you exactly what you started with versus what you're ending with in any particular period. Now that's at one point in time, so like just looking at a statement there, did you see how he got to that?
Let me pull mine up actually. So I can open it up now. Robinhood.
It should show you what you started with, any dividends you may have received, any cash deposits, any purchases, price changes of all your holdings. Some of that stuff can be a little confusing to look at and a little overwhelming, but if the graphs that they're showing you are not giving you the information, then I would suggest looking towards the statements, at least at your beginning and ending balances. They should also give you a percentage change. And if you want ever to like do a one-on-one, and I can take a look at some of that stuff for you and at least highlight where I think you should be looking.
Thank you, Anthony. I learned some stuff. See? Everybody learned something.
Right.
I was doing it the hard way. I'm telling you, like, this is all new, but you can learn quickly, especially with the apps and how helpful they are. Did that answer your question, DJ?
Totally. Yeah. I'm looking at Robinhood now in the document section. That's actually pretty helpful. So yes, thank you so much, Anthony. If we can maybe at some point offline and kind of like walk through it together, that'd be really good. That'd be helpful.
Yeah, no problem. You should have my personal email, anthony.peltier@coasttocoastfinance, and then also our general email, info@coasttocoastfinance.com. More than happy to schedule some time and look at some of data that actually applies to you together.
Awesome. Thank you.
Sweet. We are coming up on that 4-minute mark. Anybody like to share any experiences they had with stock trading? Bad, good, confusing? Any apps you recommend? Any stocks you recommend? Any news you heard? Doge Day is tomorrow. Not sure if y'all heard or even know what that is, but I've been following 6ix9ine. You got to be in the Reddit forums. You got to be in the Reddits to really know what I'm talking about here. But it's something about Doge Day. I guess it's when it was established on that day. It's the anniversary. I don't know, but I'm hype. I got some money in Doge. What we'll see what happens tomorrow. Yeah, AMC, that one too. That was see what thing that's so funny. When AMC, when GameStop was pumping, I was like, I'm pretty sure AMC is about to do something tricky, but I just don't know when. You never know when. Don't ever try to time the market. If you think you time the market, it's wrong. It'll just tank. Don't ever try to time the market. But something told me to just hold a few shares of AMC. Sure enough, always keep some diamond hands close by, guys. If you have a little bit of faith in it, if you heard a little bit of news, and you have enough to risk, hey, put $2 in it, $3.
I think it's important too to kind of expand on that. Where like a lot of times with these, what they're calling meme stocks, by the time you've heard about it, it's too late. So
yeah,
with the short squeezes and everything, there's a lot of people making money on it, and that's what you read about. Guess you almost never read about the guy that lost his life savings in the stock market because one, he's not writing about it, and two, it doesn't make people want to get into the market. But if you think about it, there's buyers and sellers for every transaction. So for every person that is making a bunch of money, there's somebody else out there that is losing their pants. So there's no losing something, their pants, shirt, I don't know. I just said pants, but there's nothing wrong with being average in the market, because being average is you're already doing better than 50% of the other people. So just keep that in mind, that for the stuff that's you read about, oh, it's up 3,000%. There's also a lot of collateral damage going on to those people that bought in at the all-time highs, and we're just too late to the party. So just keep that in mind for everyone.
Yeah, definitely. I have some friends still asking me, hey, should I buy in? Should I buy in? Is it too late? If you're asking me, it's probably too late. Yeah, I'd probably catch the next go around.
Isn't that a Drake album? If you're reading this, it's already too late.
Basically, exactly. Yeah. These are facts.
For sure.
Yeah,
we got 1 minute. Do you want to have any closing statements, Devin, where people can go or how they can reach out for more info?
Yes. A little wrap up. Stay tuned to our Instagram. I try to be on that like as long as I can, as frequently as I can on the stories, updates. We got merch. We got merch. We got some more episodes coming up. We got some collab coming up. If you felt this was useful, drop us a donate. We'll take $1. We'll take 50 cents. I'll take your quarter. I like bubble gum. Drop it. There's a link on our LinkedIn tree, on our bio, in our Instagram. So all the stuff is in our link tree. We got a link, Facebook, all that. It's all in there. It's all in there. I don't want to take the mic. You have anything to say, Alden?
Oh, no. I was just talking about, watch out for buying in high, because like I say, I did that on Coinbase with a crypto called ICP, and I was reading about it. But like you say, once you start reading about it and they're already talking about it, that it's, peak and it's high, I thought I could go in and dip in. So I bought in at 175 a piece, and then it dips down to 150. So I panic sold. And then it dipped down to, it went back up to like 160. So I bought in again. And then it dipped back down to like 120. So I sold. And so if you keep doing that, you're going to lose all your money. And that's why I'm sitting at $600 from $2,000. And I've never done that ever since I've been invested in cryptos. I've never done that. I've always just been like, all right, well, it's at 170. Now it's at 120. Oh, well, I'm just going to let it go. And that's why I've moved things to my ledger where I can't panic sell, because to sell things on your ledger, you're going to have to move it back to the exchange so that you can then sell. So that's why I like moving things to my ledger, because it makes me not be able, it pretty much forces you to hold. So that's everything on my ledger. I haven't sold, I haven't touched, I haven't done anything to. So I just let it, I just ride the wave. But like I say, if you have it on,
That's
write
excellent
down
advice,
crypto.com.
Alden. I don't remember who said it, but it was said that it's always cheaper to learn from somebody else's mistakes than your own. So,
Oh yeah, yes,
definitely
yes,
some words of wisdom there.
yes.
So, all right. I guess if that's it, then thank you everyone for joining. Thank you, Devin, so much for hosting and doing the live demos. Thanks, Alden, for sharing all of your knowledge. And
Anytime.
if anybody else has questions, feel free to reach out to us via email. Hit us up on Instagram, Facebook, Twitter, wherever you prefer. And have a great night.
All right, thank you.